Hello and welcome to Big Deal. I'm Nisha Poddar. Now, Bearing Private Equity Asia has invested close to about $8 billion in India. And on Big Deal today, I'm joined by Sean Salata, who heads the private equity firm. Welcome to CNBC-TV18, Sean. In fact, your firm has about $140 billion worth of assets under management across the globe. Let's begin with your view on the global macro factors like central bank actions, economic slowdown worries. How do you see investment climate really develop amidst all this?
Yeah, hi, Nisha. Thank you for having me on the show. It's a pleasure to be here. I think if you look at the global macro situation, the best way to describe it is that it has been improving substantially since the beginning of the year. At the beginning of the year, we were expecting sticky inflation, and we had inflation at 6.5% in the U.S. That's now down to 3%. At the beginning of the year, we weren't sure what was going to happen with unemployment, whether it was going to shoot up as a result of bank interest rates going up. What's happened is that unemployment essentially stayed flat all year. It's about 3.5% in the United States. It's still 3.5% today. And so across the board, we're seeing quite a bit of resilience. If you look at the GDP estimates at the beginning of the year for the U.S. economy, it was 0.3% or thereabouts. That's now been revised upwards to close to 2%, 1.8% or thereabouts. So you're seeing a revision of the whole macro backdrop, much more favorable and more conducive. And as a result, public stock markets in the U.S. are near all-time highs. The credit markets are more open. And we think this is actually a pretty interesting time to be investing generally in private equity in Asia and in India specifically. We see it as a really interesting time right now, probably one of the most interesting periods, most attractive times for investments in private equity in India that we've ever seen.
Wow, that is really a very, positive commentary coming in from you, who has spent or has invested close to $8 billion. So, Sean, what are the factors which is really driving your attraction towards India as one of the best destinations or best-in-time destinations right now for investment? And will that also reflect in the amount that you dole out in this country?
Well, in addition to investing about $8 billion, I should add that we've realized and distributed close to over $6 billion, actually, of realizations of profitable investments already from India. So it is a market that's very proven through our investment program and that we feel more and more confident in as we see things progressing. We've been investing in India since the early mid-1990s, so going on 25 years. And the structural changes that we've seen in terms of the digital stack, in terms of the bankruptcy code, in terms of what's happening with the whole demographics in the economy and the growth in middle class spending power, and many of the government policies that are encouraging more investment, all of these structural changes are now starting to come to fruition. GST, for example, and a lot of these things are just creating a sort of a virtuous cycle that's driving growth in the economy, that's driving consumer spending. And with consumer spending comes aspirational demand for things like healthcare, which is an area that we're very positive. We recently made a few investments in healthcare sector. And so we just continue to believe that it's an economy, it's a country that's very much ripe for continued growth and development. And at the moment, it's our largest single allocation out of our Asian investment program is to Indian investments. And we plan to make more investments than we've announced already this year.
Any estimate on how much more on that, Sean?
Well, I was in Delhi a few months ago, and I made a statement that I think we can invest $5 billion over the next 3 years. That was 2-3 months ago before we announced the last couple of investments. So I think that number is very much achievable now. We've probably committed to $2 billion out of the $5 billion that we said we were looking to deploy in just the first 6 months of that window. So I think that sort of investment amount is very doable, and we continue to have very strong deal flow. And we continue to look at investments in the key thematic areas that we're interested in: healthcare, IT, as well as financial services, and now increasingly also the manufacturing sector.
Right. What is it in manufacturing that you like, Sean?
I think that's a less proven sector and one that we're just starting to understand and develop more conviction about. But it is benefiting from the geopolitical winds that are blowing and favorably in the direction of moving more manufacturing to India from places like China. It is actually in line with government policy, the Make in India policy. You know, we're seeing government support for domestically produced products, both protectionist measures as well as some of the incentivization that's being put in place to support, from a tax standpoint, to support exports from India. So we're just starting to understand the industry and look at it more closely. I'd say it's more preliminary and more early stage than the other areas that we've been looking at for many years, like IT, healthcare, and financial services.
That's right. These three sectors are sector of choice for most of the private equity firms, along with some consumption-based sectors. Now, manufacturing really needs a lot of investments in India, and that coming in from private equity can really give a big boost. While you are still at a nascent stage in understanding this, but have you identified, because manufacturing is a very large basket, so what kind of manufacturing, if you can throw more light on that, Sean?
I think it's hard for me to describe it in too much narrow detail at this point. We're looking at quite broadly across the sectors. We're looking at more of the higher value added segments of the economy. We're looking clearly at the ones that are more engaged in global supply chains and that are exporting in areas that will continue to drive demand. So I don't have any specific areas that I can comment on at this time.
That's right. And India is also putting a lot of thrust behind Make in India and manufacturing in India. Now, Sean, two big investments you've made and big acquisitions also. One was Indira IVF. You want to take us through the rationale that you see in this particular space and also the overall healthcare. How do you view investments over there?
Well, Indira is a fantastic business, and it's very aligned with our whole purpose-driven approach to investing as well, being financial investors, but also purpose-driven and trying to have a positive impact everywhere that we invest. 125,000 families have had successful pregnancies as a result of the efforts of the Indira IVF business over the years. So really having a positive impact on society. It's a market-leading business. It's probably 3 times the size of its nearest competitors. It has 115 clinics across the country. There's an opportunity, we believe, to expand the footprint even further. It's a business that is highly regarded in terms of its technology, the way it's adopting. There's even been some recent reports about how it's adopting AI in having higher success rates in selecting the various eggs that are used in the IVF process. And so we just think that there's a lot of opportunity for growth, and the company's exhibited tremendous growth historically. We think that growth can continue with further investment from us, and that's really the plan. Healthcare generally, I was in Hyderabad last week, and I was just amazed. I was visiting AIG Hospitals, which is one of the companies that we've invested in, and Dr. Reddy and the team there have done an amazing job in building a world-class healthcare and research facility. And I was just amazed to see the demand, the number of people coming in every day for outpatient procedures, and just the volume of demand and the quality of healthcare that's being provided.
Right.
And it just was very clear to me how important this is to the aspiring middle-class new consumers in India who want healthcare for their families, for their parents, for their children, for their loved ones. So I think it's tremendous opportunity for investors, and it's just great to see these developments taking place.
That's right. Healthcare awareness as well as also the insurance penetration is giving a lot of lift to especially the hospital space and other healthcare pockets. But Sean, there are very few pharma companies available, and there is one such opportunity also available. Do you think that a pure play pharma investment is something that is in line with your strategy in India?
Yes, pharma is definitely part of our strategy. We've been looking at many of the different opportunities in the sector. We haven't found one yet, but we're working on a number of them at the moment. I do think there will be opportunities there. It's another sector where India has a world-class competitive capability, like in IT services. And it's in line with our strategy, so we'll continue to look there.
You spoke about the facility of Dr. Reddy's, but Cipla is also something that we have here reported that the promoters would like to offload some stake in. So those are the kind of opportunities that Barings may want to look into, Sean?
I can't comment on any publicly traded companies or anything like that, but I can tell you that we are looking quite broadly at healthcare, pharmaceuticals, and continue to work actively on new investment ideas.
All right. On that note, Sean, we'll slip into a very short breather on the show. We'll come back and continue the conversation with Baring Asia. Stay tuned.